In problem 10.3, we're determining accounts that are affected by closing entries. We're given the general ledger accounts listed. We want to indicate which financial statement they appear, either the balance sheet or the income statement. We want to indicate whether or not it's affected by a closing entry, and then whether it appears in the post-closing trial balance or not. So in our example, accounts payable, it's a balance sheet item, liability. It is not affected by a closing entry. We don't close any permanent accounts, and it does appear in the post-closing trial, and all permanent accounts appear on the post-closing trial balance. So accounts receivable, an asset, appears in the balance sheet, permanent account not affected by a closing entry, and yes, it is on the post-closing trial balance. Advertising expense, an expense. The temporary account appears on the income statement. It is affected by a closing entry and does not appear on the post-closing trial balance. All temporary accounts are closed, so they do not appear on the post-closing trial balance. Cash and bank asset, balance sheet, no closing entry. We don't want to start over with cash every month. Cash is permanent, it's ongoing, and yes, it appears on the post-closing trial balance. Exercise class revenue, a revenue account, income statement. Yes, it is closed. No, it is not in the post-closing trial balance. Another asset, equipment, exercise equipment is on the balance sheet, not affected by a closing entry, and yes, it appears on the post-closing trial balance. Income summary is our temporary account that is our catch-all to close the temporary account. So we don't classify it on a financial statement, but we certainly need it for closing entries, and it does not appear on the post-closing trial balance. It is actually closed, so it is affected by closing entries, and it doesn't appear anywhere at the end of the period. Equipment, asset, balance sheet, not closed, yes, on the post-closing trial balance. Maintenance expense and expense, income statement, yes, it is closed, no, on the post-closing trial balance. As are miscellaneous expense and your revenues. So skip those two. Office furniture and asset, no, it is not closed. Yes, it is on the post-closing trial balance. Rent, an expense, income statement, yes, it is closed. No to the post-closing trial balance. Prepare tools, they're assets. Balance sheet, no closing entry. Yes to the post-closing trial balance. Now, most of these, if they're not affected by a closing entry, they're on the post-closing trial balance. And if they are affected by a closing entry, they're not on the post-closing trial balance. The only one that does not fit that is the capital account, which is a balance sheet item, and it is affected by a closing entry because our revenues and our expenses are closed in the form of net income into the owner's capital. So it is affected by closing entry, but yet it still is on the post-closing trial balance, so my assets equal liabilities and owner's equity, and all those temporary accounts are transferred into the owner's capital account. The owner withdraws the balance sheet item. That too is affected by a closing entry because withdrawals are closed into capital, and because it's closed temporary account, it is in the post-closing trial balance. And an expense, the income statement item, yes, it is affected by closing entries. No, it is not on the post-closing trial balance. Okay, so a good rule to understand the difference between temporary and permanent accounts, to be able to distinguish between assets, liabilities, owner's equity, revenue and expenses, and the financial statements they appear on, and whether they're affected by closing entries and appearing on the post-closing trial balance.